Hello everyone and welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of November the 11th, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. We can see that we've very, very good week to be buying dollars last week, as I had talked about in last week's weekly outlook, that we usually look for the dollar to weaken at the end of the first week of the new month after the non-farm payroll. So we could see further dollar strength here, but again, the conditions are not ideal. When we look at the previous sell-off on the dollar, we can see that it's usually around the exact same time, October the 8th here, and we can see it again over here on September the 12th. There's some consistency in this particular signal, regardless of what's going on in the market. Now, a lot of things are still very much unresolved with this trade, with the trade tariffs between the US and China. And again, guys, I'm not convinced that the dollar is going to benefit much more from this, or the equity markets, or oil for that matter also. So we've got to look at all of these particular factors. Right now, the dollar is in a very clear overbought condition at 83.7, but the MACD still has not crossed the zero line, and our predicted differences also heavily overbought. So again, when we look at that and we compare it to the time in the month, the question is now, is the demand for the dollars going to exhaust, and are we going to see the dollar move lower? Now, in my respectful opinion, when we look closer at this, we can see where the dollar is getting its strength from. It's getting its strength from the equity markets. As the S&P 500 moves higher, the dollar is absolutely following it. That is a very clear intermarket correlation that I've repeatedly identified. So if there's any hiccup in the equity markets globally, not just the S&P 500, but globally, that is what will likely, believe it or not, send the dollar lower and the euro higher. We've seen the euro come under significant selling pressure this week, and again, that's because we have stocks moving higher. Now, when I'm looking at light sweet crude oil, we can see that light sweet crude oil also is following the equity markets and the dollar higher, but they're not breaking out past the equity markets are struggling anywhere above $57 a barrel. We've hit almost 58 and then it backs off. We're holding the line here, but a very, very weak buy signal on oil. It's not overly strong at this particular time, but I believe that oil has really got a boost from the S&P 500. Now, again, when we look at the conditions in the S&P 500, the one thing that has been pointed out to me and that I've made note of is that a lot of this rally in the S&P 500 is based on very, very low volume. If we look at the VantagePoint indicators and we bring up price, and then we actually look at the volume in the S&P 500, you can see that it's actually very low. We're in a heavily overbought condition, and it still keeps trying to go higher. But again, for all the wrong reasons. Earnings are mediocre at best. Demand for equities, well, there's demand as long as everything is good. But is this a buy the rumor, sell the fact? Everything that we're seeing with the US and China? I believe it is. But again, a number of major banks this past week have been very clear about their positions. Wells Fargo and I believe also JP Morgan, where they have stated very clearly they are not putting any new money to work at these particular levels. So they're we could call it the wall of worry, we can call it a number of different things, but again, it doesn't appear to be a true rally just yet. But again, we'll continue to monitor this. That's the best we can do. When we look at gold, gold finally pushed lower on this big push up on the S&P 500, but once again, you can see that we're holding this support down here around this 1460, very stubborn. So any kind of reversal on the S&P 500 and the US dollar, we will immediately see gold rise or continue its very, very strong uptrend in 2019. If we look at gold on a year-over-year basis, you'd be crazy not to be buying gold in 2019. It's been a fantastic trade, up over 20% on the year. So a pullback is perfectly normal. But again, we're going to watch the equity markets very closely to see where we go from here, because that will indirectly determine what happens with gold also, or vice versa. Now, as we get into our main currencies going into next week, starting with the Euro-US pair, the Euro again struggling to make any break above the area that I discussed in last week's Forex Weekly Outlook. This 111.70 area up to the 112 is just provided too much resistance, and the euro is breaking down. But once again here, guys, if we look at the euro and we look at the cycles, when the dollar usually sells off, the euro is the immediately benefits from that. So when I'm looking at this, I'm seeing an RSI at 16.2. Our predicted differences are starting to bottom out here, and we've got very, very strong additional support at this 109.91 area. Now it looks like we're going to try and move to that area, but I would be very cautious about shorting down around this 110 area, 109.90. We can see the last rally on the euro was on October the 10th. That coincides what I've shown you guys about how the dollar is weak at the end of the first week of the month after the non-farm payroll. But again, just to reiterate that, this was a funny month because the November 1st fell on a Friday. So theoretically, this past week, is the end of the first week of the new month. Now, we also have a holiday Monday. We have Remembrance Day, Memorial Day, I think in the US. I'm not sure what the US holiday, bank holiday is, but there's a holiday. So we're going to see some illiquid markets on Monday. Don't fall for a fake price. If we get a big push down on the euro here, be careful anywhere down in this area between the 109.41 and 109.90. That's where I feel the buyers are likely to come back in. And then when they come back in, we should see gold start to move back up and the S&P 500 and the dollar start to ease. I'm not saying we're going to completely reverse the move on the dollar and the S&P, but we should see it back off a little bit going into next week. Now, as we look at the US Swiss franc again, this past rally in the S&P 500 is very confusing for a number of different reasons. When we look at the US Swiss franc, this is a risk on trade. If the S&P 500 is going higher, so is US Swiss franc. You can see that it is going higher, but well within the same range. We've got the lower bottom end of this particular range, which we didn't even get to the bottom of, down around 98.50, and the upper end of this particular range starts at the 99.70 area. So again, when we look at the overall depreciation of the US dollar against the weakest currency in the Forex market, the Swiss franc, because of the interest rates, then you would think that this particular pair would at least be above parity, but it's not. So it tells me that the current move on the S&P 500 may not be what it appears to be, and we should still look to sell rallies, but I would hold off a little bit on this. Let's see if we can get above parity, and then we'll go from there. Now, when we look at the pound dollar under pressure again for a number of different reasons. We've got the verified zone up here. We've tested it. We are failing. But once again, this is the UK election. You've got the Bank of England, a number of different factors here, guys. But when we're looking at momentum in our trading, we're at 22.9, so I'm not sure how much more downside we're going to see here, particularly when we're coming into a period of known US dollar weakness. So we'll keep an eye on this one right now. But again, we're looking at that critical VP level, 128.08. If we can get back up above 128.08 in the early part of the week by Wednesday, it's more likely than not this particular pair is going to reverse. And again, we're going to watch those main indicators in our VantagePoint software. Our neural index, when it turns green, the RSI starts turning back up. That should be a clear indication to look to start getting long again. Now, with the dollar yen has come up and tested a very significant resistance level at 109.28. But once again here, guys, with the S&P 500 at almost 3,100, the dollar yen refuses to go higher. That's just a fact. That's not me saying it here, guys. That's the market saying we are unwilling to buy the dollar yen at this particular price. There is substantial resistance in this particular area. When we go back 6 months, we can see the resistance is even stronger if we can manage to get up into this high around 109.93. So if you are shorting it like me, make sure that your stops are well above 1010. Do not get tagged out in these verified zones. Now, as we look at our three main commodity currencies going into next week, the CAD is pushed higher. Once again here, guys, this move is not consistent with the intermarket correlations we know. Whenever the equity markets go screaming higher, there's three currencies that tend to follow it: the CAD, the Aussie, the New Zealand, and we see considerable weakness in the yen and the Swiss franc. It's a very different picture here, guys, in the month of November. So we want to monitor this very closely, but if we can stay above our current verified zone, which is coming in at or about approximately, once again, about the 132.08 area, if we can stay above that, we may be able to get back up here towards the 133.45 area, but I think the sellers are going to come out before then, guys, on overall US dollar weakness, or at least on a corrective move on the dollar weaker. Now, the last couple of weeks have been very strong weeks for buying. You certainly don't want to be short the dollar in the last couple of weeks unless you're very specific on which pairs you're targeting, right? So this one right now, the Canadian unemployment report, a little bit softer. That's pushed this up a little bit, but it's on a Friday, holiday thin markets, knowing there's a Canadian holiday and a US holiday on Monday. When the cat's away, the mice will play here, right, guys? So let's take this one with a grain of salt. We do have the medium term crossing the long-term predicted difference. In my respectful opinion, when the neural index, if the neural index turns red in the next couple of days, that would be the trigger for us to look to get short here. Now, with Aussie US and New Zealand US, again, very confusing why the Aussie and the New Zealand did not move higher this past week. They actually moved lower. That's not consistent with the intermarket correlations that we know. I talked about this level on the Aussie last week, this area around 69.29, and the additional level that I also talked about was this 68.94 area. Both levels, we've broken both. Now, we're back on a key vantage point level. This is the number one way you want to interpret the software, guys. When we look at this, 68.54 is that critical vantage point T-cross long, a longer term pivot area. Above it, we're usually above it, we're long, below it, we're short with a primary trend. But again, the predicted differences are moving lower. The RSI, everything here says that, or at least it appears, it looks like things are going lower. But if we cannot stay below 68.54, then you do not want to short at this particular level. Okay, guys? If we're going to look for longs, I would suggest that longs are very likely to work down around the 68.08 area. But even right here, between 68.54 and 68.08, if we can get the equity markets continuing to move higher, we could have a long trade here. But I believe that both the Aussie US and its counterpart, which is of course New Zealand US, which I'll pull up now, both of these are warning us that the rally in the equity markets, there's something a little off here. That's the main thing in trading that we want to understand here, guys, is we look for these consistency in the intermarket correlations to help guide us on multiple different markets. When something happens in one market, it usually will spin off to at least 4 or 5 others. So with that said, this is the VantagePoint AI Market Outlook for the week of November the 11th, 2019.